Hi, I'm Andrew Unterweger. I thought it's a timely comment to make at the moment with global bond markets selling off, just particularly in the last 2 days. And lots of people contacting me in relation to their fears regarding inflation, what that's going to do to interest rates, to asset prices and so on. And if we have a look at what's happening here in terms of inflation, perhaps from an Australian perspective in relation to real estate, it's a slightly different situation. So for some people who can still remember, let's say, the 80s, when we did have high inflation in Australia, and what happened there, I vividly remember the 87 stock market crash, and what happened to property prices after that. They actually rose sharply, especially in Sydney, and I recall that from a personal aspect. But if we go back, most people don't realise, but inflation over the last 50 years in Australia peaked in 1974 at 15.42%, something that would be considered totally unheard of in today's kind of economic and interest rate backdrop. So whilst the bond market has decided that inflation is going to be here pretty much next year, or perhaps even sooner, and bonds spiking, I'm not quite certain that is actually what's going to happen. If you look at real yields, that's US 10-year treasuries, less expected inflation, okay, they've moved up to minus 0.6%. But it's yet to be seen whether the reality of that comes through and how those rates move forward. In the bottom line aspect, I guess what people have to consider is why is inflation coming? We're expecting the world to rebound. So in other words, the bond market's saying, markets are going to rebound, growth is going to spike, and all of a sudden we're going to have inflation back. But central bankers, Jerome Powell at the Fed, Phil Lowe at the RBA, and the other central banks have basically said that they don't think that they're going to have to raise rates or be able to raise rates for perhaps another 3 years at least, because they need to keep stimulating the economy. And they're doing so with loose monetary policy, i.e. low interest rates, especially at the shorter end of the yield curve, and they're now protecting the longer end of the yield curve through their QE, or quantitative easing, by buying government securities. I think that may continue because the backdrop I see is a continuing one at the moment of high unemployment, underutilisation. We still have large portions of the economy, many people reliant on government subsidies and handouts, governments issuing massive amounts of new government securities, and the central banks around the world buying those. So I don't think that governments will be very keen on seeing rates spike and stay there, because that means all of that debt is going to start costing them a lot more money to service. On the flip side of that, perhaps on a microeconomic level, if people are looking at their own situation, all those people that already own properties in Australia, particularly I'm speaking about now, are in a pretty good position if inflation were to take hold. And that's not just residential, it's commercial also, because if the economy powers along, companies will need to employ more people, they'll need more space, more office space, they'll be able to be paying higher rents, and all of that will pass through then in wages growth, which means that individuals will be receiving more money, they'll be able to pay higher rents for residential properties, and so on. So in other words, those asset prices will increase in a real basis. And perhaps the luckiest people of all will be those people that have bought over the last couple of years and have financed their properties through longer term fixed rates, which are very low currently, and have taken a high LVR, high loan to value ratio. So there are lots of things involved in that. We'll go through more of those as the next few weeks pan out, but I'm not convinced that inflation is coming back just yet and is here to stay. I think this may be perhaps not quite a temper tantrum in terms of the taper going off, as we saw in a prior situation. But I think that bond markets may stabilise once more once central banks come in and pacify markets in general. Thanks very much. See you next time.